Depreciation is a tax deduction that lets you recover the cost of business or investment property over time. The exam angle you need is simple. Every dollar of depreciation you claim reduces basis. That matters later, because lower basis usually means higher gain when you sell. On part 1, they most often sneak this in through residential rentals. A classic trap is forgetting land. Land is never depreciable. Only the building is. So when you buy rental real estate, you split the purchase price between land and building, and you depreciate only the building portion. On the EA exam, if they give you two values, they're begging you to exclude land from depreciation and from depreciable basis. For most residential rental property, the concept to remember is the 27.5-year recovery period. You don't need to compute MACRS tables here. You just need the idea. Residential rentals get depreciated slowly, and that depreciation reduces adjusted basis each year. So when you see a later sale, you start with cost basis, then subtract depreciation to get adjusted basis. When you report a disposition, meaning a sale or other transfer, you need a few inputs every time. First, what type of asset is it? Personal use, business, or investment? Second, the adjusted basis, which is usually cost plus improvements, minus depreciation and other reductions. Third, proceeds, what you got paid. Those three pieces drive gain or loss, and they also drive where it ends up on the return. Holding period is the timing rule that decides short-term versus long-term. Short-term is 1 year or less. Long-term is more than 1 year. Think a year plus a day. On the EA exam, they love date math. If you bought it on July 1st last year and sold it on July 1st this year, that's 1 year, so still short-term. You need more than 1 year for long-term. Which of the following items does not decrease an asset's basis? Choices include the cost of defending a title to the property, Section 179 deductions, a casualty loss, and a manufacturer's rebate. Think about which one would increase basis instead of reducing it. Think about it. The correct answer is the cost of defending a title to the property. That's a capital expenditure tied to acquiring or perfecting ownership, so it increases basis. Section 179 deductions reduce basis because you already expensed part of the cost. A manufacturer's rebate is tempting, but it generally reduces the purchase price, so it also reduces basis. Ethan bought a home for $250,000, allocated $50,000 to land and $200,000 to the house. He later added a bathroom for $18,000. He moves out and converts it to a rental when a tenant moves in on October 1st, 2023. On that date, FMV is $310,000, with $65,000 land and $245,000 house. He also paid $2,400 for plumbing repairs after renting it. What basis is used to calculate depreciation during the rental period? Think about it. The correct answer is $218,000. For property converted from personal to rental, depreciable basis is the lesser of adjusted basis or FMV at conversion, and only the building counts. The house adjusted basis is $200,000 plus the $18,000 bathroom, or $218,000. The house FMV is $245,000, so you use $218,000. The $2,400 plumbing repair is a repair, not an improvement, so it doesn't increase basis.